Hey folks, welcome to the Mortgage Minute for the beginning of September. Well, the big news today is that the Bank of Canada had their rate announcement. So I say big news, but really it wasn't. I mean, if you recall from our last Mortgage Minute, we talked about the fact that when you're in the middle of an election like we are, the Bank of Canada is not going to interfere. They're not going to make any major announcements lest they be deemed to be influencing the outcome of that election one way or another. So, as expected, the Bank of Canada stayed steady on interest rates today and made no movement. However, here's the key. It's not the fact they didn't change rates. It's what was the implications or the wording that would give us an indication of where the future is going. What's interesting is they said that the economy's on track, even though we had a 1.1% contraction to the economy. So let me put this in terms that will help you understand it. One of the things when you look at the Bank of Canada, what influences interest rates is inflation. The inflation target, speed bump, if you will, is 2%. So when the economy surges past 2%, the idea is you increase interest rates to slow it down. When the economy goes below 2% inflation, you need to stimulate it. That's why when you see things like 9/11 or the subprime crisis or a pandemic, governments around the world always lower rates to stimulate the economy. So what would trigger a Bank of Canada or any central bank to increase rates? Well, it would have to be a hot, vibrant economy, and not just real estate prices, everything. So what was interesting, this is from the Financial Post on the weekend, basically saying the Bank of Canada is set to raise rates next year. This is a poll of economists. Basically, they're saying that, you know what, the economy should be back on track. Look for interest rates to raise the second half of 2022. So if you're in a variable rate mortgage right now, you don't have to worry until the second half of 2022. But what could disrupt that? Well, here's an interesting thing. The Delta variant is caught wreaking havoc on global supply chain issues. And one of the comments from the Bank of Canada was the fact that supply chain issues is hampering the recovery of the economy. So you have a fourth wave Delta variant, you got supply chain issues. What else could happen globally that would hinder economic growth? Well, we all know anything. It could be a natural disaster, earthquake, hurricane. Listen, the bottom line is there's lots of things going on globally that could impact Canada's recovery. So the Bank of Canada is being optimistic. They're basically saying we think we're on track, even though we just had a contraction and the real estate market is obviously slowing down. So what does all this mean to you? Well, at the end of the day, I'm going to say you're probably looking at I'm going to predict we're going to be at least 1 year before the Bank of Canada has any ability to raise interest rates. Now, that doesn't mean that bond yields might not change or your 5-year fixed rate might not fluctuate in between now and then. But as it goes for the Bank of Canada and the prime lending rate, and hello, this is for all of you with a variable rate mortgage, or if you have a variable rate mortgage and you're wondering when you should lock it in, this is the type of information you need to make an informed decision. So if you have any questions around that, please send me an email, peter@peterkinch.com, or call me directly. And as always, happy to answer all your questions. It's an interesting times to say the least. And that's why we're going to stay on top of it for you. So we'll continue to monitor this as we go along. In the meantime, I hope you have a fantastic week, and we'll talk to you again in 2 weeks.